Hi guys, I'm back with another episode of our video series Block Talk. And as we know, there are a lot of people who have their doubts and reservations about blockchain and what it has already done. So I'll be speaking with one such thinker, and he's Juan Llanos. Now he's a lot of things, so I have to read this out. He's a seasoned financial compliance expert and certified AML specialist. He is also a sought after startup mentor, advisor, and speaker on AML, regulatory compliance strategy, and operational excellence in the blockchain and crypto space. So hang around and join us in the next segment and find out exactly what is the reality and get a reality check on what blockchain is actually doing right now. So, hi, Juan. Thank you for joining me today.
Thank you. Nice to be here.
Yeah, okay. So speaking of blockchain, like everybody's talking about it like it's some sort of a magic word or something is going to solve everything. So how true is that?
It's not a panacea. It's not a all-solving technology. It's a very specific type of technology that addresses a very specific type of problem. And the question is that for some reason, I know it may be a sign of the times that everything spreads like wildfire on the internet and Twitter and Facebook. Information spreads so quickly. So now everyone is talking and opining about a technology that is highly technical and highly specialized, and not everyone should be talking about it seriously because it's a very low-level technology. Do you see people, opining about SMTP, HTTP, and other protocols? And you don't have that in society, but you have that in the Bitcoin and blockchain world. So it's not, to answer your question, no, I don't agree. It's all a panacea for anything.
Right. So what are some of the real world problems in its way? Like there's a lot of potential and people say it's going to do this and that, but what is stopping it?
So real world problems that it's trying to solve, there are many, right? There is the big problem that we have today is, first of all, the first blockchain that emerged, the original blockchain, the Bitcoin blockchain, is not only a technical breakthrough, but it's also a political and economic breakthrough. It's the creation of an option, of a choice that did not exist before in terms of many aspects that have to do with politics and economics. One of them is currency and money, right? So imagine that now, because of blockchain, thanks to blockchain, there's the choice of creating an alternative universe, if you will, a parallel universe where money is minted differently, is produced differently, is transacted differently, is controlled differently, it's owned differently, completely differently from what we're used to as humans today, as modern life humans. So there is the aspect of creating this alternative universe of payments and money, and also the possibility of building distributed technology or decentralized and distributed systems on top of that technology. So that is the main value proposition. It's a political statement, 100%. So in terms of the obstacles, right? What are the obstacles today to that happening or to that becoming mainstream? First of all, I always divide things into two or three so people can remember. So there's social, political, and technical obstacles, right? The social one is I'm going to leave for the end because it's the acceptability of the user, right? And it's a number one problem in general, right? You need people to accept, you need society to accept any new thing that comes out, right? But there's technical problems. There's the technical problems or challenges have to do with, is this network that runs itself, that is supposedly distributed, really that distributed? Is it that decentralized? Is it that immutable as promised by the creators and the promoters of this technology? So there's technical question marks. is it possible to continue running this technology, consuming all this energy in the proof of work consensus? So will now the new option of proof of stake work? Will it not favor only the highly, the early adopters and the large holders of the stakes? Will that become less democratic and less decentralized than expected or desired? So there's a lot of technical questions and that are still unanswered and will take time to answer, right? And then to me, the political and the political pushback, the threat to the existing status quo is what to me is the biggest problem obstacle. The acceptance and when someone has a dominant position and a challenger comes in, that is where the opposition happens, right? And when the arguments and the guerrilla warfare and the intelligence and the secret dealings to counter the technology or to destroy the technology happen, and that is happening today. There's a lot of public and private opposition to these new technologies because they are very threatening to the status quo. How businesses run today, full of intermediaries, full of unnecessary rank-seeking intermediaries, and now we have a technology that supposedly connects peers, participants that need to rely on a system that tracks transactions, coordinates their actions, and they don't necessarily trust each other, and they don't have the time and the resources to create the auditing systems that exist today. Now we have a system that basically does all this automatically, magically, right, in a way, from the point of view of the user. And so who's gonna, half of the world today, or probably most of the world, live off of creating bridges and exploiting information asymmetries, right? Creating bridges meaning I do that myself as a professional, right? My livelihood depends on people not understanding the law and not understanding compliance and not understanding all of the intricacies of regulation. And that's what I do for a living. And this technology eventually, probably decades from today, will get rid of all those intermediaries because code and regulation and will be all automated, right? Will be run by robots basically, and there will be less of a need to audit or control things from outside. So that is kind of the promise and the challenges, right, for this new technology.
So as of now, would you say blockchain has managed to deliver on any of its promises in any use case?
No, not at all. I think that it's still a very promising technology. It's an emerging technology. It probably, if I can give a cynical answer to that and say that probably it has delivered on the promise to mint millionaires, right, out of nowhere. Actually, it was not a promise. It just happened. It just happened to happen. So, seriously, I think that all of the transformative potential, the promises of this technology, the things that excited all of us who started getting into this world early on in 11, 12, are still there, and it's happening. It's happening slowly, and I think it will eventually come to fruition, but it has not yet delivered on those promises. To answer your specific question, it's all work in progress, and what's happening today is that the first aspect of cryptocurrencies in blockchain was Bitcoin, right? This new alternative cryptocurrency. There was a new medium of payment, new medium of exchange, a new currency for the world. The lingua franca of currencies, the English equivalent. of the money world where everyone speaks it. You speak it. I am from Argentina. You're from a different country. We speak language, the English language. The English language is our lingua franca, right? Our communication medium. So the payment medium for the world, regardless of borders and politics and countries and nations and language, was going to be this global cryptocurrency. It hasn't. No, because now it's so easy to create a new blockchain, a new cryptocurrency, to mint tokens on top of new technologies. So there's hundreds of thousands of potential currencies now, and we're back to the 18th century and to previous times when there was not a single ruling currency. So that is one aspect, right? It has not happened, and it will probably never happen, right? And there's also the pushback from the legacy systems, including government institutions, to continue to use legal tender. Citizens, normal people, need to continue using legal tender, what is considered legal. So, and if these currencies are not considered legal tender, then there will always need to be a translation of all these currencies into legal tender and back, right? If we want to use these technologies. So the monetary aspect is there. It's an alternative. It's a store of value. It has appreciated enormously since it came out. Tens of thousands of percents, which are, it's a very, but no currency does that. A different kind of asset appreciates that in such a proportion, right? So now we are in the midst of this explosion of speculation and investing and trading. This is the era we're in, right? And this is what may be the necessary evil required for the rest of the technology to continue growing. Maybe we need to be in this period of 2 to 5 to probably 10 years of speculation and trading and attracting institutional investors and creating hedge funds and all kinds of trading mechanisms to push for the necessary societal changes and political changes, the law and regulation that is required for the rest of the technology to be bootstrapped and to create a sound infrastructure. So, and I think that I remember Barry Silbert talking that, always commenting that Barry Silbert is an investor here in New York, early pioneer in Bitcoin investing in cryptocurrency investing. He had the vision and still has the vision that the trading and investing is going to be the necessary bootstrapping mechanism for the entire industry. So this is what's happening in the world. You look anywhere in the world, and it's all about trading and investing and speculating. Kids, 15-year-olds, are speculating in the crypto asset markets today. They probably shouldn't, because it's highly risky. But they're also they're investing such small amounts that they're learning, right? They're learning in a sandbox environment where the risk of loss is not that high. And when they're 25 and 30 and 35, they will probably be experts, and they will probably be ultra responsible and create mechanisms for doing all these things in the way that is expected, with transparency, responsibility, and compliance with regulations, etc., etc. But anyway, it's a very interesting world, but it has not yet. It's on the way to evolving and becoming mature, and there's very smart and interesting teams building very important infrastructure around the world today.
Taking from your previous response, I want to talk about cryptocurrency trade. So there is this new thing out, right? IEOs, initial exchange offerings. So could you just make it, simplify it for people like me? What are the pros and cons?
Well, so we have to understand. I don't know who the audience is. Hopefully, they will be experts, and
No,
you guys.
They are not going to be experts. They're going to be people like me. I don't know.
You are an expert. Well, okay. So anyway, so we have to step back a little bit And the IEO, a new acronym that has come out, is very new. It's so new that it's probably a month old, right, or 2 months or 3 months old, right? And we're speaking in March of 2019. So so first of all, we have to understand what an IPO is, right? Initial public offering. An initial public offering of equities, of stock, in a previously private company, is the coming out, the maturity of a company where after it has proven a concept, built a product, grown to a place and to where a company that has escape velocity, basically, right? It has already been incubated, funded, grown, has experimented, tested, and found the market fit for their product, right? And now it's ready to be launched in space, if you will, if we take the space analogy, and has about to reach escape velocity, meaning it will be autonomous, it's mature enough to reach the market, the general marketplace, public investors, right? Retail investors. So there's an initial public offering, usually after a long years of enterprise creation and venture creation, right? And it's a long process where obviously the early capitalists, the largest risk takers, will get the highest returns, the high multiples, right? Because they take the risk of investing in a small team of young people that are experimenting, they have an idea and they have to execute on the idea, and finally they grow and they're ready to launch. So the initial public offering is a highly regulated and highly controlled process through which the equity in a company becomes public and it becomes tradable by the retail investors, right? In approved marketplaces, right? In approved exchanges, in highly regulated exchanges. There's lots of requirements to be able to get to that point, right? First of all, they have to have a successful product and company, right? They have to have a successful, proven business model, right? It's working, you're selling, you're growing fast, and you're on your way to, you need capital to continue growing, expanding internationally probably, or delivering on the vision, but you already have a proven company that works. That, it takes decades sometimes, full decade probably. And ICOs came in the world of the blockchain in Bitcoin, and they are equivalent of launching equity, but on the blockchain to retail investors without any requirement to have gone through all this growth process, this grueling process of creating an enterprise, building a product, testing it, finding the market fit, and being about to achieve escape velocity that is required of normal companies, right? So the initial coin offering, the ICO, is this process of launching a website and the promise that you will be building something that is exciting, is valuable, and you're going to be making returns, or you're going to be growing something. So it's the equivalent of penny stocks, companies that are launched without any verification of value, any solid and sound foundation to the plan. And it's possible because the mechanism to issue those tokens is so easy. You can do it in 10 minutes and 20 minutes. An engineer can do it in 20 minutes. So it's very easy to launch a token, raise money, meaning get money from retail investors, and also not so retail institutional investors via tokens, that now you're funded, you have accumulated millions of dollars, but we don't have that product in the marketplace yet. Cynically, it's a way of fundraising without by skirting the challenges and the hard work that needs to be put into building an enterprise. But anyway, that's not the full picture. That's kind of the summary. There's just a crowdfunding or a collective funding mechanism that is very easy to do on the blockchain thanks to these new protocols that you can be easily launched, right? So you reach your market very fast and you collect money from the market very fast, usually in cryptocurrency, not in legal tender, not in fiat currency. So anyway, so that's the ICO. And now we have the IEO, initial exchange offering, right? So now this is an evolution. What happened is that over the last couple of years or 3 years, so the securities authorities, regulators around the world, especially in the United States, have begun to analyze these token offerings, token launches, and have basically determined that the large majority, again, this is not the full picture. There's cases where there's tokens that have a real utility. They're a completely new class of digital asset that enables and is some action or some access to some service, and it's a type of token that is not really a security, or it has 20% of the security, but it's really performing a function that is required, right? Like it's very complex to explain, but I'm refraining myself from using technical terms on purpose so that anyone can understand. So, but if you buy a security, you're buying it as an investor. The primary purpose of buying a security, either in the traditional capital markets, or you're making an investment, you want a return, you expect a return from that investment. There are some tokens where you need to use that, and the return may not come, but you still need the token to access a service. Those are called utility or consumer tokens. They have more of a consumptive value than a speculative value. The problem is that all of these tokens, whether they're consumer tokens or utility or securities tokens, they're all tradable in open exchanges. So there's a potential for speculation and from its value to be traded up and down. So it floats in the markets, and it's subject to the all of the potential risks of anything floating in the open marketplaces, especially in the digital marketplaces where everything is so. It's possible to manipulate the trading activity to mask something that produce the perception of high volume when there isn't, for example, right? So this long explanation, it was expected to land on the initial exchange offering. The initial exchange offering is a new mechanism to launch tokens through an exchange, a more established intermediary, an exchange that is supposed to vet the project, screen out the projects that don't make sense, that have basically no potential for success because they are not well run or they're just outright scams. So I think the initial exchange offering, it's a marketing ploy or stratagem to attract the marketplace and to create, there's a new buzzword, a new acronym to pay attention to now. What is an IEO? So, and I hope that the government or the authorities or the public don't misunderstand it. I think that it's positive for tokens to have to be vetted by an established exchange and managed, and the release of the token and the sale of the token to be in a way controlled by an intermediary when after all that has happened over the past 2 or 3 years, right? In terms of this incredible inflation of tokens and digital penny stocks that has happened in the world, and the scams and the fraud, rampant fraud that has happened. So the question now is, so there's benefits to the user or the investor. There's probably benefits to the issuer of the token, and there's a lot of benefits for the exchange, trading and executing the sale of the token. I think that the ones that benefit the most in this equation, this new setup, are the exchanges, because now the exchanges are selling a channel. It's a channel partnership with the issuer, right? The issuer needs to release the token either because they want to raise funds or because they want to basically deliver it to the community so the community can start using their product or the platform if it's a utility token. But now it goes through an exchange that vets them, goes through a hopefully thorough due diligence process where the team are vetted, the product is vetted, the technology, there's security audits, there's a real evaluation and assessment of the quality of the project. So once they're accepted, they're launched via the exchange. So the offering of the token is conducted via the exchange or through the exchange rather than peer-to-peer on a peer-to-peer basis, connecting the issuer directly with the investor. So, and who wins here? I think it's the exchange, because the exchange now has the potential to capture new accounts. And if the product is very promising, if it has been marketed as a very promising product, and it goes through that exchange in particular, now potentially they have hundreds of thousands of new accounts that they didn't have before, right? So every time there's a launch, the exchange will open a new account and will get funding to into their internal wallets. So the winner here is the exchange. Hopefully, it will also be a win to the investor. But there's also lots of risks in these intermediaries being in the middle of this. And anyway, it's a new marketing ploy, I would say. Sounds negative, but I think it's very smart to create a new acronym and create demand for new things. But everyone has to be very well informed and do their research. And there's the need to trust the quality of the exchange, quality in the general sense, cybersecurity, that they're doing deep and thorough due diligence, and that they're really being thoughtful and careful about who they onboard.
Sounds like there are a lot of legal loopholes around.
Yes, I think also that when the exchanges are becoming increasingly sophisticated, and that is a reality, right? So first of all, they're in the decentralized world, this utopian world where there's no control and there's a robot, autonomous machine running itself, completely decentralized, without an intermediary that anyone can go to for questions, right? The problem with intermediaries or figureheads is that they're targets for questioning, either from any stakeholder, right? If you're an investor, and someone screws up, you can go to that person. You can demand a reparation, right? You have some recourse because you have identified who is in charge, right? If you are a consumer, the same, right? You should be able to call the number and get a response. And those things, by the way, are the things that regulation has created. They need to create two-way communication channels between consumers and enterprise and industry, right? And the way to provide recourse in the case of a failure or a misdeed, right? Mismanagement or even wrongdoing, right? So, and the same happens with regulators. Now regulators have a specific place to go for answers, right? They can go there and say, oh, now I have this exchange that is not only listing and trading all these cryptocurrencies, but it is also launching cryptocurrencies. It's a launch pad for tokens in the marketplace. So now they can go to that exchange, to those intermediaries, and force them through regulation to implement controls, right, and create control environments, and basically, so in a way, it's completely against the desire of the blockchain cryptocurrency pioneers of decentralization. It's a form of intermediation, re-intermediation, if you will. And the loopholes you were talking about, I think that it's not that there are loopholes and this is a loophole. I think, on the contrary, this is a setup or a mechanism that is potentially more compliant than not, right? Because you have this intermediary vetting the process. There are standards. There's a protocol that you have to go through, and if you don't qualify, you don't even get in. So it's a filtering mechanism that is positive for the marketplace, because now if something is completely fictitious and really very well marketed, but completely hollow internally, basically completely empty. Um, uh, it won't happen. It won't reach the marketplace. So I don't think it's about loopholes. It's about creating the perception of trust and cleaning and cleansing the mess that we are in today.
You've said before that governments should employ more developers and engineers and
Yes.
yeah, right, instead of just lawyers. But all of this sounds like governments really need more lawyers.
No. So, I've been saying that for a long time, and I say it jokingly, but not so jokingly. And to me, I think that, okay, so regulation and compliance and controls and oversight, uh, they have, it's very valid, right? Society needs to control what's going on, right? If we didn't have regulation and controls over our food, we could be poisoned. We could be drinking water that kills us. We could be imagining all the things that could go wrong if there were not controls, right? Flying. I wouldn't get on a plane if I didn't know that there's hundreds of pages of protocols that need to be run before every flight, right? And some of the controls are electronic, right, and are automatic, but some are manual and human, right? And every time you go on a plane, you see the pilot and co-pilot going through the checklist and checking the flaps, and you see the flaps moving. And so this is because we need controls. We need to trust but verify, basically. That's the whole concept. But the problem with when I say that regulators need to hire more engineers and product and operations people than lawyers is because I think that I'm very frustrated that we just accept in society that regulation and the law will always lag behind technology and innovation. So why do we accept that? Why do we have to sit back and say, oh, yeah, we're innovators, we're trailblazers, we have Silicon Valley where there's no asking for permission, it's all about forgiveness, eventually if need be, or just going through it and building it. And then we have the world of law enforcement, right? Enforcement of the regulation. So I think that there should be more understanding of both worlds, right? In this specifically in the fintech world, the financial technology or financial services or critical infrastructure, there should be more understanding on the part of innovators and pioneers and trailblazers of how the world works and what is expected today of innovators and technologists, right? But on the other hand, I strongly believe that there's more of a need if we want to evolve as civilization, as human civilization. There's more of a need for the current control infrastructures, government institutions, republics, regulators, administrators of public goods to really understand technology better. Right, and I'm hopeful I see now the SEC hiring crypto specialists, right? They have just, they're hiring at least technologists, but it's one or two. So the ratio is, I remember when FinCEN a few years ago, there was a call for, a new hiring spree in the government, right? During in the Obama times. And it was, we're looking for 27 new litigators. Lawyers who are litigators. So not only lawyers who understand the law and the regulation, what exists today, written in codes and jurisprudence and everything that has to do with the law, the supposed way of doing things, but litigators. So people who could go after, who really are trying to catch the wrongdoers or the lawbreakers, right? So it's a gotcha attitude instead of a research and collaboration to research and see where the world is going and designing regulation for that new future together without partisan politics, without anything in the middle, any obstacle in the middle. Instead of that, I don't see that anywhere in the world. I see that actually in very few countries in the world. I see, smaller jurisdictions that have less to lose, right? It's about who has more to lose, right? So the United States of America has little incentive in embracing all these new technologies because bureaucracies are there for a reason. They have built it themselves for a reason, to control, but also to sustain the power that they have already, right? And the dominant position that they have today. So I believe strongly that there should be more innovation, more forward thinking from the government. I mean, the ratio between technologists and engineers and lawyers should be at least half and half, not one in 100, right? As there are probably are today. And it's very frustrating, but I don't see that happening. And now with the crypto trading world, instead of creating innovative ways of trading, well, some people are doing actually. They are creating alternative mechanisms, alternative marketplaces, alternative exchanges, completely decentralized with lower risk of manipulation, lower risk of fraud, lower risk of also control, right, or potential abuse. And still, they're completely incompatible with existing regulation. So now everyone, including decentralized exchanges, this decentralized economy, decentralized finance world, is obligated to hire traditional compliance officers, lawyers with ties and formal and solemn attitudes, bowing to the regulator, instead of creating laboratories for innovation of compliance and regulation, instead of creating and showing that there's an alternative here that does not require these 15 tomes of regulation. Why? Because we have these alternatives, we have these better ways of doing things, bigger protections against laws. The question is that we don't have those protections against laws, and we don't have that evolved technology yet. So I think that when the technology is mature enough, we will have the opportunity to show that there's a better way of managing things and overseeing things, and the old exogenous, externally imposed mechanisms of control will slowly start going away. But that is a long time away. I was hoping when the blockchain world exploded, when I joined Consensus 2 years ago, that was going to happen in my lifetime. But I doubt it.
So are you saying there has been no change in cybercrime since cryptocurrency and Bitcoin has been available for use?
So in terms of cybercrime, well, that's another vector, right? Cybercrime. I don't think there has been an increase because of blockchain but I see that the systems as they exist today, the distributed systems that require private, PKI, public key infrastructure, requiring two sets of keys, a public key and a private key that needs to be very securely controlled by the user and the owner. That paradigm of self-control and self-management of risk is completely new and is not there yet. So what we're seeing is a transition to a world where there will be fewer intermediaries controlling the ledgers and the access to the ledgers and the writing and the editing of the ledgers because of decentralized platforms and blockchains. But we still need to solve the problem of private key storage and management, right? And recovery. So that is happening today. Also, there's very smart people. There's very great groups, teams trying to build these technologies, these new safeguards. But cybercrime is going to continue exploiting the path of least resistance, whatever the technology, right? Whether it's a bank, whether it's this exchange, if there is one vector of attack, they will exploit it. That's what they're designed to do, right? And if the bounty is large enough, they will go after it. So what's happening is that there have been vulnerabilities anywhere in the world, right? And they're not related to the new technology. They're related to the old technology, if you will, which is the storage, where the keys are stored, how the keys are stored, whether we pay attention to, we create strong passwords or weak passwords, whether we have dual control for access, where we have segregation of duties, all of these best practices that should be in place in general for any system, they have not been in place, and that absence that has been exploited by cybercriminals and is being exploited by cybercriminals. That is why we keep having hacking incidents and coins, private keys stolen every other week. So it's a new universe, a new world where cyber criminals have a new vector of attack. Oh, we used to have banks. We have to have large centers of control and power that and large bounties. Now we have individuals that are weak and vulnerable. So now they're probably adapting. They're trying to do social engineering, trying to find who's the prominent guy, who's stupid enough to advertise that they're a billionaire and millionaire, and so they're basically putting a target in their forehead, right? And that, again, we're human, right? We're trying to do the best we can with what we have, and what we have is how we have evolved to this point in time.
Regulation wise, we are really, really, really far away from target, right?
Really far away from
target, like the ideal situation where everything is safe or at least less risky. So where would
absolutely, I agree with you. We are very far away from that. Yes.
So where would you say in the space of regulations should say the governments and regulatory bodies focus first and take really into consideration?
So what they should be focusing on first, I think regulators are doing what they can based on what resources they have, right? And I'm not talking about manpower or budgets. I'm talking about incentives, right? So what they have is a system that is not really incentivized to accompany this new parallel universe that is being created. Very few people have an incentive to embrace this new technology and to really become pioneers. Maybe policymakers are the few ones that do have that incentive. Why? Because policymakers are political, right? They are elected officials, and they need to show themselves as pro-innovation, pro-job creation, pro-growth and development, pro-national security. So whoever is getting involved today is doing it obviously out of self-interest. Everything works out of self-interest. We have to understand incentives, right? So everyone is doing what they can based on their self-interest and the incentives they have and the resources they have. And by resources, I mean everything. So what they should be I think they're focusing on the right way. They're focusing on financial loss, investor protection, consumer protection. Those are the things that are most important if we want to create broad social acceptability of a new technology. We have to engender trust. and we have to engender substantive trust, not um, formal trust, right? Or not a facade of trust, but real, solid, trusted mechanisms, right? Things that really cannot be broken, right? And if they're broken, can be fixed very fast. So those are, I think they're focusing on the right way. But again, and I wish they were focusing also on other stimulative aspects, like the disruption of uh, uh, how these things are going to be controlled in the future. That's why they need to hire more engineers. They need to understand how smart contracts work, how artificial intelligence works, how autonomous agents work, how state machines work. So these things are very complex, and they are basically part of this large trend, mega trend towards automation and robotization, right? And they need to understand that. They need to understand that the power of this device, the power of this incredibly powerful machine that we have, every citizen will have in their hands, right? And so I don't see that happening. So, but I'm mixing things up. I'm mixing my own thoughts with the expected response to your answer, to your question. So I think they're doing what they can, and some are more incentivized to be enlightened or forward-thinking than others, right? I don't think the United States of America regulators are incentivized to be pioneers in anything, because they're under a lot of pressure to protect the status quo, and only those that want to stand out and obviously cross to the private sector or have some self-interest are they being, only then are they being public and vocal about these things, in my opinion.
That was my last question, and that's really a lot of information to take back home.
Okay.
And thank
I
you.
hope it helps someone think about these things.
So that's the end of today's conversation. Join me again next time as I speak with another blockchain expert. Until then, don't forget to check out our website, hashcashconsultants.com, and find out what we are doing with the technology. So bye for now.